Hey, it's me, Brad Hammond, with your Portland real estate market update for the first quarter of 2023. Things have changed quite a bit from last year to where we're sitting right now. So I'm happy to dive into those numbers. But first, before we get into that, if you want to dive into these numbers a little bit further, talk about different strategies, other ways to kind of get some deals, I would be more than happy to chat. So feel free to get a hold of me. I've got my contact info right there. Call, text, email, whatever works for you, and we'll get the conversation started. So without further ado, in case you don't want to walk through this whole thing, my quick summary is that the market is starting to heat up again from where it was last year at this time. We are right around 6% interest rates, and I think that that's probably going to be the norm for a little while. And then also median sales prices are on the rise again, which is a little bit odd. I would have thought that they would have come down with interest rates being higher than what they were back in early 2022. There's really a tale of two different stories. Is that what it's called? But there's definitely a 2022 version and a 2023 version that's starting to be born right now. So we'll take a look at those. And then the best deals, they're not really out there anymore. You're not going to find some smoking deal on the MLS. You're going to really have to hunt for it. Those deals need to be created and need to be thought of more intelligently. And the market's changing quickly. So reach out to your local real estate expert, and they will be more than happy to help you out. So let's dive in. This is a quick graph of what the interest rates are and have been. Let me move myself out of the way. So honestly, they're right around 6.25, and that's going to be for an owner-occupied conventional loan. They're right around where they were at the beginning of the year. There have been some ups and downs, but we're right around where we were in January. So interesting to see. I actually don't know where things are going to be in the next 2 months, 6 months, 12 months. I would have thought they would have come down by now, but energy prices are starting to rise, which creates a lot of pressure on the economy, which keeps interest rates elevated. So things to watch there for sure. This is a fun little heat map that that's been created, and I really, really like it. It's basically saying those medium sales prices in the like 400 range is really, really what's popular. And you can kind of see this year, 2023, compared to the previous years, the heat map in red has really, really collapsed. So those price points are kind of getting narrower, and I think that's just the result of fewer buyers, fewer sellers, kind of in the market in general. So it's really kind of condensed into that smaller area as well. So if you're looking in that price range, then you are probably going to be facing multiple offers. You're going to have to bid over asking price or give some other concessions that you wouldn't have to if you were going to be in the green areas. But if you are looking for those multi-million-dollar single-family homes, you might be able to find a good deal. All right, so closed sales. Look, if you compare it to where we were last year, yeah, things are slower. There's less closed sales, but they're starting to tick up from January and from December, November last year. And that's exactly what I'm talking about. We're going to see this as a constant theme throughout the rest of the presentation, but things were really, really hot in the beginning and in the middle of last year, and then they started to kind of taper off. And now I think that we're kind of seeing the inverse, where things were low, and then we're going to start to see them slowly increase over the next few months as well. All right, so pending sales, that is a leading indicator of what the closed sales will be, in about another month or so. So you can see they've kind of been trending with that seasonal average. They popped up a little bit in March, and we're going to kind of see those, I think, continue, maybe kind of stay steady, but I think we're going to continue and get more to where we were in the 2021 numbers as well. So more to come on that, but I think that we're going to see more transactions, more pending sales coming in the future. And the reason for that is I'm kind of hoping that we're going to see even more active listings kind of coming on the market. So you can see that last year, the green listings, active listings really kind of went up. And the reason for that is, as we'll see a little bit later, is that the days on market kind of ticked up. And I see that lowering, but I'm hoping there's going to be more listings coming on the market that is usually seasonally adjusted, and that usually happens, as you can kind of see right there, in the March, April, May, June timeframe is when things start to really kind of take off. So as I was just mentioning, look at this. Look at this huge spike in new listings just from February to March. That's slightly abnormal to see it at that much of an incline, but I think that that's just going to kind of continue. I know that I've been talking to some real estate photography companies, and they have been saying that they have been booked out solid for a while. So that is telling me they're super busy, which means there's going to be more listings coming available, which is going to be more transactions, because there's definitely a ton of buyers out there hungry for those listings to come online. So days on market has dropped a little bit. And I think that's just because as soon as those properties are coming online, there are plenty of buyers that are looking to purchase those. There's been some pent up demand. I think people were a little bit weary last year of those higher interest rates, but because those are becoming the new norm, people are just thinking, okay, well, that's just what it is right now. They're not going to go back to those 3%, 4% rates. So might as well just do it now, because it's only going to get worse. Prices are only going to increase from here. Average sales price. I love this slide. I love this slide. So look, sales prices have went in 2022 been going down pretty much all year, ever since interest rates started to rise back in March of last year. And then in January, that's exactly what I'm saying. They started to tick up. And so that's just these tales of two different years. 2022 was a down year for a lot of different reasons, but now it's starting to tick back up. We still have 9 months to go in this year, but I can kind of see things kind of going back to normal pre-pandemic levels, kind of going back to that normal real estate cycle where they start to go up in the spring and summer, and then just transactions tend to fall in the winter. All right, so this is months of inventory. You can kind of see that, you know, in 2022, we were ticking up, upwards into like the 2 and change months worth of inventory. And now we're starting to fall back down to where we have been into the ones, into the mid ones. So basically what this means is that if there were to be no more properties that were to be listed on the market, it would take 1.8 months for us to sell through all of the current properties that are currently listed. And a lot of people like to look at this as the health of the real estate environment. I think there's a lot more that kind of goes into it than just this, but it's definitely a good indicator as far as how things are looking. I just think that this number is going to continue to fall in the next few months for the rest of the year, but time will be the judge of that. All right, and so active new listings, not a whole lot to see here. I mean, you can see from previous years, it's been basically flat for the first quarter, and then in the next couple of months, it's going to start to rise. So we'll see where these total active listings fall, but I do think that they're going to rise somewhere in between 2021 and 2022 levels, where you can kind of see that gap between the green and the blue lines. But again, we'll just kind of have to see what actually happens. Okay, talking about affordability, I think this is a really, really crucial slide right here, because affordability is what it all comes down to. If people can't afford to buy homes, then they're going to continue to rent. There's really going to be no incentive for them to do that. So 100, this 100 line means that it is affordable for people to purchase homes. And there's some things that go into this. It has to do with the average sales price, the average household income in Portland, and the average interest rate. So you can see basically in 2022, that number, the affordability rate really, really went down. Even though home prices fell, the big difference in there, the big lever is because interest rates were higher, which made things less affordable. So the lower the number, the less affordable the price. But look, we're starting to tick back up. Now, the last data that we have is for the end of the year, but it's starting to tick back up closer to 100, which is where we want to be. We want to be, in my opinion, above that 100, so things are more affordable for the average household and just a better overall picture. One little caveat here is that the average household income only gets updated once per year, and I believe it's in the spring. I want to say it's in this type of time frame right now. So hopefully the next time we see this affordability index, these numbers might be skewed a little bit, but we're still going off of 2022 numbers that were released. I'm sorry, they might actually be 2021 numbers for household incomes that were released in April of 2022. Okay, so I came across this slide. This slide is from the the state of Oregon economists, and this is the housing permit count in Portland. So we are still way, way, way below where we should be, and then that is what's creating a lot of these lack of homes, which is really kind of creating a lot of demand for homes that we don't have. And so the big issue here is that in the financial crisis, basically builders were not building any homes, and we have not recovered where we should have been from that. You can kind of see the past few years, there's been some ups and downs, but we need to build substantially more homes. I'm going to be honest, I think that Portland does not make it easy to build new homes for a variety of reasons. Part of that is being the taxes associated with it and just the cost of building. And then there's other things as well, as far as tearing down old buildings. And then just the whole permitting process just takes forever in the city of Portland as well. So my big takeaways is prices are going to continue to go up for the rest of the year. I think that now is kind of a good time to purchase. Maybe give it a couple more months and see where things lie. I really don't know where interest rates are going to be. I can't tell. When I did this back in January, I was like, yes, absolutely. Interest rates are going to be into the 5s by this summer. I really don't know. There's so many levers being pulled in so many different directions in the global economy that it's so hard to be able to tell what is going to be happening with the interest rates. I don't think that anybody knows. There's just so many new issues going on in the world today. I haven't seen any good deals out there. Last year I was able to get a lot of offers accepted for well below asking price. This year it's not the same at all. It's asking price, it's above asking price. If we are able to get something under asking price, it has been sitting on the market for a while. A lot of other people have passed on it for one reason or another. So you have to find these good deals, whether you're going to be putting sweat equity into it, whether you're going to be putting your own cash into renovating it. It could have an awkward layout. There's going to be something wrong with this property that you are going to have to cure in order for it to be a good deal out there. But again, we'll just kind of have to wait and see what happens. But I would strongly recommend being ready to purchase. That means having your pre-approval ready. You are in the right mindset to purchase. And a strong offer does not necessarily mean the highest offer. I've definitely gotten offers accepted that were not the highest dollar amount, but there were other strong aspects of the offer. And that's just working with a good agent, like myself, that can help you get those offers accepted. Keep an eye on the unemployment data. I think that's going to be a really big factor as far as what the Fed is going to do with interest rates and what the 10-year Treasury is going to be doing. And then also the consumer price index, the CPI, that's the big indicator that the Fed is going to be looking at as well. So if you can take a look at that, if you happen to see what those numbers line up at each month when those reports come out on their given Fridays, that will kind of give you a little bit of an indication as to what interest rates are going to be looking like. Or you can ask me, you can ask your friendly lender, and they'd be more than happy to kind of just give you a rough idea as to what the past, what interest rates are looking like. Things are starting to heat up again. So be prepared for that. Be ready for that. Don't go in assuming that you're going to be able to offer less than asking price and get your offer accepted. Things are going and things are going hot. So just be prepared for that. I'm still buying. I purchased a place in February. I'm super, super excited about it. It's going to be a great investment, but you have to know what you're getting into and you have to create that deal. This property, I paid over asking price for it, and that was the only offer, which was strategic. It wasn't just stupidity. But yeah, things are definitely going over asking price, and you just have to know that and be okay with that and adjust for that when you're looking at those properties. So if you want to chat, I would be more than happy to, but that is kind of my synopsis of what it looks like for the first quarter of the year. Thank you.